Welcome back to Iraqi Dinar Alert. Today, we're diving into a huge question that is on everyone's mind. Can the Iraqi dinar actually return to its pre-war exchange rates? It's a hot topic, and we're going to break down what the experts are saying. Before the wars of the early 90s and 2003, the Iraqi dinar was a powerhouse currency. Back in the 80s, thanks to massive oil revenues and a stable financial system, one dinar was worth around $3 or even more. This incredible value was because the government controlled the exchange rate. It wasn't floating on the open market like it is today. But then came the wars, sanctions, and instability, which caused the dinar's value to plummet. The entire currency system was rebuilt from the ground up, making a return to those old rates a massive challenge. So, what exactly caused the dinar to lose so much value? Experts point to a few key factors. First, years of war and sanctions destroyed infrastructure, cut oil production, and drained Iraq's foreign reserves. Second, the system changed from a government-controlled rate to a market-influenced one. Today, the dinar's value is tied to dollar demand, oil prices, and market forces. Third, the rise of the parallel or black market created a huge gap between official and street rates, which eroded public trust. And finally, Iraq's banking system was outdated for decades, leading to a cash-heavy economy that was hard to track. Now let's look at Iraq today. The economy has made some serious progress. Oil exports are up, foreign reserves are stable, and the central bank is rolling out major reforms. We're seeing a big push for digital banking, stricter monitoring of currency transfers, and better compliance with international standards. These steps are definitely strengthening Iraq's financial footing and helping to close the gap between the official and market rates. But big challenges are still on the table. The economy is heavily dependent on oil. Inflation is a constant pressure, and political tensions and corruption haven't gone away. The parallel market still has a lot of influence. Because of these hurdles, a sudden dramatic jump in the dinar's value just isn't likely in the short term. So what are the economists and financial experts saying? The consensus is pretty clear. Returning to a rate where one dinar is worth several US dollars is not realistic in today's world. Here's why. First, modern foreign exchange markets don't support artificially high rates set by governments. You need real economic strength and transparency. Second, Iraq's economy is still over 90% dependent on oil. A strong currency needs a diverse economic base, which Iraq is still working to build. And third, as long as citizens and businesses prefer using US dollars for savings and big purchases, the dinar will struggle to gain strength. However, this doesn't mean there's no hope. Analysts do believe the dinar can strengthen gradually over time, just not to those historic highs. So, could the dinar strengthen in the future? Absolutely. A return to the old glory days is unlikely, but a stronger dinar is definitely on the table. How? First, by getting more people to use the dinar for daily transactions, which reduces the reliance on the dollar. Second, by integrating further with the global banking system to boost stability and investor confidence. Third, and this is the big one, diversifying the economy into areas like agriculture, manufacturing, and tourism. And finally, maintaining stable inflation and responsible government spending. If Iraq can achieve long-term political stability, it will encourage investment and help stabilize the exchange rate. To get back to pre-war rates would require an economic miracle. We're talking about a massive expansion of non-oil sectors, a fully trusted international banking system, and a complete shift away from a dollar-dominated economy. Experts say this could take decades if it's even possible. So, what's the final verdict? A return to the pre-war exchange rates is highly unlikely. The economic world has changed, and Iraq's financial system is completely different. But this isn't bad news. The potential for the dinar to become stronger, more stable, and more valuable is very real. The reforms are heading in the right direction. So while we may not see a $3 dinar again, A much healthier and appreciated dinar is an achievable goal for the future. Today, we're tackling a question that has fascinated investors and economists for years. Could the Iraqi dinar ever return to its pre-war strength? Before all the conflict, the dinar was a powerhouse, once trading for over $3. So, with Iraq's recent progress, is a comeback to those glory days even possible? Let's break down the history, the hurdles, and what experts really think. First, let's go back in time. Before the 1990s, Iraq's economy was very different. The country was flush with oil money and had a strong government-controlled financial system. This allowed them to artificially set the dinar's value at that high rate of over $3. But this wasn't a free market rate. It was a fixed peg. Then, the Gulf War, sanctions, and the 2003 invasion changed everything. The country's economy was shattered, foreign reserves dried up, and the dinar's value plummeted. The old system was gone, replaced by a market-driven one. So, what caused such a dramatic fall? It boils down to a few key things. Decades of conflict destroyed Iraq's ability to produce and export. International sanctions cut Iraq off from global finance, creating a severe shortage of foreign currency. The switch from a fixed exchange rate to a market-based one meant the dinar's value was now tied to real-world economic performance, which was weak. On top of that, a persistent black market for US dollars created instability, and the country's banking system is still struggling to modernize and gain public trust. All these factors combined to send the dinar spiraling downwards. Fast forward to today, and Iraq is making some real progress. Oil revenues are up, foreign currency reserves are growing, and the government is cracking down on currency smuggling. They're also pushing for more digital banking and trying to meet global financial standards. These are great steps that have helped stabilize the dinar and close the gap between the official and street rates. However, major challenges remain. The economy is still almost entirely dependent on oil. Political instability and corruption are ongoing problems, and the US dollar is still the go-to currency for major purchases and savings. These issues put a cap on how much the dinar can realistically appreciate in the short term. So, what do financial experts say about a return to those old multi-dollar rates? The consensus is pretty clear. It's just not realistic. Why? Well, those pre-war rates were artificially set. In today's global market, a currency's value has to be backed by strong economic fundamentals like a diversified economy, low inflation, and massive foreign reserves. Iraq relies on oil for over 90% of its revenue. A currency simply can't become that strong without multiple, thriving industries to support it. Plus, the widespread use of the US dollar inside Iraq weakens the demand for the dinar, making it harder for its value to rise significantly. But that doesn't mean there's no hope for the dinar. While a return to $3 is a fantasy, a stronger, more stable dinar is definitely achievable. So what could help it get there? First, encouraging more people and businesses to use the dinar instead of the dollar for daily transactions. Second, modernizing the banking system to integrate more deeply with global finance, which would attract foreign investment. The most important factor, though, is diversifying the economy. Developing sectors like agriculture, tourism, and technology would reduce the country's risky dependence on oil. Combined with stable politics and smart monetary policy, these steps could lead to a gradual, steady increase in the dinar's value. So, what's the final verdict? A return to the pre-war exchange rate is, for all practical purposes, impossible. The world has changed, and so has Iraq's economy. The economic conditions that allowed for that old rate simply don't exist anymore. However, the story isn't over. Through continued reforms, fighting corruption, and building a more diverse economy, Iraq can absolutely achieve a healthier, more respected currency. The dream of a $3 dinar might be off the table, but the goal of a stable and steadily appreciating dinar is very much within reach. Did you know that back in the 1980s, one Iraqi dinar was worth over $3? That's right. Before the conflicts that reshaped the nation, Iraq's currency was one of the strongest in the region. This has led many to wonder, could the dinar ever return to those glory days? Let's dive into the history, the current reality, and what financial experts really think. So, how was the dinar so valuable back then? Well, it wasn't because of a free market. In the 80s, Iraq had a government-controlled exchange rate, propped up by massive oil revenues. The government simply declared its value. But this system was artificial. After the Gulf War sanctions and the 2003 conflict, Iraq's economy was completely transformed. The old system was gone, and the dinar's value plummeted. Several key factors caused this dramatic drop. Prolonged wars destroyed infrastructure and scared off investors. Heavy international sanctions cut off Iraq from global trade and access to foreign currency. The country also shifted from a fixed rate to a market-based system, where supply and demand now dictate the currency's value. Add in a powerful black market and an underdeveloped banking system, and you have the perfect storm for a currency collapse. But the story doesn't end there. In recent years, Iraq has been making some serious moves to stabilize its economy. Oil exports are strong, foreign currency reserves are growing, and the government is cracking down on illegal dollar transactions. Digital banking is expanding, and Iraq is working hard to comply with international financial standards. These are all positive signs. However, major challenges remain. The economy is still heavily dependent on oil, which makes it vulnerable to price swings. Political instability, inflation, and a weak local manufacturing sector are also holding it back. Plus, the US dollar is still king for many everyday transactions, which limits demand for the dinar. So, what do the experts say? The consensus is pretty clear. A return to the pre-war rate of over $3 is highly unrealistic. Why? Because that old rate was not based on true economic strength. Today, as global financial system demands that a currency's value be backed by a diverse and productive economy. Iraq's economy, while improving, is not there yet. It lacks strong manufacturing, tourism, and tech sectors. Public trust in the dinar also needs to be rebuilt after years of instability. But this doesn't mean the future is bleak. Far from it. While a return to the past is a fantasy, a stronger and more stable dinar is definitely possible. So, what's the path forward? First, encouraging people and businesses to use the dinar more instead of the dollar. This is crucial. Second, integrating more deeply with international banks to attract investment. Third, and most importantly, building up non-oil sectors of the economy like agriculture, tourism, and services. And of course, political stability is the foundation for all of this. To put it simply, for the dinar to even approach its old value, Iraq would need a complete economic miracle, a fully diversified economy, a world-class banking system, massive foreign investment, and lasting political peace. It's an incredibly high bar, so the final verdict? A return to the old exchange rates is not a realistic expectation. The economic world has changed, and so has Iraq. But the country is on a path to building something new and more sustainable. With continued reforms and a focus on long-term growth, Iraq can achieve a stable, respectable, and gradually strengthening currency. It's not about reclaiming an artificial past, but about building a real and prosperous future. Could the Iraqi dinar ever return to its glory days when it was worth over $3? It's a question that sparks a lot of debate and hope. Before the conflicts of the 1990s and 2000s, the dinar was a respected currency in the region. Now, with Iraq's political situation improving, oil revenues rising, and new financial rules in place, many are wondering if a comeback is possible. Let's dive into Iraq's economic history, see why the dinar fell, and look at what experts think about its future. So, how was the dinar so strong back in the 1980s? The answer is simple: the government controlled everything. The exchange rate wasn't based on market forces. It was a fixed value set by the state, propped up by huge oil revenues. It was an artificial strength. That entire system crumbled with the Gulf War, international sanctions, and the 2003 invasion. So, getting back to that old rate isn't just a matter of flipping a switch. It would mean rebuilding an economic system that no longer exists. The dinar's dramatic fall wasn't caused by a single event, but a perfect storm of problems. Decades of war destroyed infrastructure and scared off investors. Economic sanctions cut Iraq off from global trade, creating a massive shortage of foreign currency. After 2003, Iraq shifted to a market-based economy, meaning the dinar's value was now tied to supply and demand, not government decrees. A powerful black market also emerged, creating instability and eroding public trust in the official currency. On top of that, a weak banking sector struggled with modernization, which further hampered the dinar's stability. But it's not all bad news. In recent years, Iraq has made some serious moves to stabilize its economy. The country's foreign currency reserves are growing, and there are stricter controls on dollar transactions to fight smuggling. Higher oil income has provided a much-needed boost, and the government is pushing for more electronic banking to modernize the financial system. These reforms have definitely helped create a more stable environment for the dinar. However, major hurdles remain. Iraq is still overwhelmingly dependent on oil, which makes its economy vulnerable to price swings. Inflation continues to be a problem, and the political landscape, while improving, is still uncertain. The biggest challenge, though, is the widespread use of the US dollar in daily life. From buying a car to paying rent, many Iraqis prefer dollars, which keeps demand for the dinar low and limits its potential to grow. So what do the experts say? The consensus among economists is clear. A return to the pre-war exchange rate of over $3 is highly unlikely. That old rate was artificial and not a true reflection of economic strength. In today's global economy, a currency's value has to be earned. With over 90% of its revenue coming from oil, Iraq's economy simply isn't diverse enough to support such a high valuation. Plus, as long as people prefer using dollars for major transactions, the dinar will struggle to gain ground. But this doesn't mean the dinar is doomed. Even if the old rates are a fantasy, there's a clear path to a stronger currency. The key is encouraging people to use the dinar for their daily business. Strengthening ties with international banks would attract foreign investment and build trust. The most important step, however, is diversifying the economy. Developing sectors like agriculture, technology, and tourism would create new revenue streams and make the economy more resilient. With stable governance and smart policies, the dinar can gradually and steadily increase in value. So to put it simply, no, it's not realistic for the Iraqi dinar to return to its pre-war exchange rate. The world has changed, and so has Iraq's economy. But the future isn't bleak. Through consistent reforms, economic diversification, and political stability, Iraq can build a stronger, more stable, and more respected dinar. The old days may be gone, but a more valuable and dependable currency is well within reach. Thanks for watching, and don't forget to like and subscribe for more content like this.